Welcome to another episode of the podcast series, The ETF Investor, brought to you by the ETF specialists, etfSA.co.za. My name is Nerina Visser and I'm your host. Through this podcast series, we bring you insight and understanding of ETFs, exchange-traded funds, clarity on how to best use it in any type of investment portfolio, technical details of what happens inside the ETF, and practical advice on how to choose ETFs for your investment wants and needs. The South African economy has been built, at least in part, on the gold mining industry, and the JSE itself was established in 1887 during the first South African gold rush. But as the saying goes, all that glitters is not gold, and with South Africa being the largest producer of platinum in the world by a significant margin, and the second largest producer of palladium, not far behind Russia, platinum group metals, or PGMs as they are also known, are deserving of attention. Fortunately for ETF investors, there is easy and efficient access to investments in PGMs available on the JSE. And today I have invited Micheal Mgwaba, head of the ETP business at Absa CIB, and Johann Erasmus, head of index and passive funds at the Standard Bank Group and 1nvest SA, to be my guests. You are both familiar favorites on the ETF Investor podcast. You see, I didn't say you're old. I just said that you're familiar favorites. So I can say welcome back, both Micheal and Johann.
Good afternoon, Nerina.
Good afternoon to everyone.
Guys, I have noticed an interesting trend in the precious metal ETPs since the start of this year. Gold had been the darling of precious metal ETFs since the Absa New Gold ETF first listed on the JSE almost 20 years ago. And the three gold ETFs currently still represent 13% of the total ETP industry in South Africa. But platinum is fast becoming the new kid on the block, so to speak, with around 8 billion rand in new capital raised since the start of this year. So, Micheal, help us out here. What would you say is the investment case for precious metals in general? So not just gold, but of course PGMs as well, maybe as opposed to industrial metals. So things like copper, steel, zinc, etc. How should investors think about the investment value proposition of these metal commodities?
Thanks, Nerina. That's actually a very good question, and I think it requires time to unpack it because we want to make sure that the audience actually understand the case very well. Maybe I think the way I'm going to answer this question, let me break it down into two parts, which I think is important. One is obviously the investment case for platinum, but secondly is also how the platinum can be used as a storage of value or as a hedge against inflation or currency, which is same as what you see actually on the gold ETF. So the investment case goes like this, the way I see it. So if you go back since 1900, the platinum has traded almost, I think at a premium to gold for about 86% of the time. And of course, that was obviously based on its supply and demand fundamentals, which I think have added to its precious value. However, if you're looking at the recent years, negative sentiments, concern over a decline in demand for auto industry, and I think also to some extent with what you see on the jewelry, I think that have seen the precious value or the premium over gold eroded over time. But today, I think the investment case for platinum is strengthened even more considerably. If you're looking at the demand outlook for auto industry, which is I think the main driver of the price of platinum, is demonstrating a considerable upside. And I think it's largely driven by a couple of things. One, if you're looking at, there was this big talk around industry moving into electronic cars. So we believe the transition away from the internal combustion engines, I think is lower than expected. But also more interestingly is the fact that we're looking at the increase in emission standard across Europe and in Asia. I think that is actually driving what's the higher platinum loadings on cars. And so that is actually supporting the platinum price. But also I think more interesting is obviously what we see recently happening is that we see what you call the substitution effects for platinum for palladium. And I think that is obviously largely driven by the fact that the platinum is cheaper than the palladium for now. Of course, when things turn around, we'll see maybe palladium also picking up. But something that is more interesting, which is, I think, in my view, it's supporting the price of platinum very well, is actually the supply side. Basically, supply is very much constrained. And why is constrained? I mean, if you're looking at the largest producer of platinum globally, South Africa produces about 70% of the global platinum. And as a country, we're being affected by load shedding, which of course affect production in the mining, and therefore that actually supports the price of platinum. But also, what is interesting is that if you're looking at the last 2 years again, right, platinum had surplus, right? We had surplus in terms of the platinum industry. But if you're looking at the beginning of this year, platinum now has moved into deficits, right? And it's keeping on growing. And that is actually also supporting the price of platinum. So for me, that is actually, I think, a good case. But again, what is also interesting is that why do we see that surplus happening now? It is again supported by the robust demand in the auto industry as well as on the industrial sector. But what is interesting is that we're also seeing, I think, a growing demand on a very small but very important sector, which is the hydrogen economy. And the view is that that's the economy that's going to be driving the long-term return of the platinum. Okay. Now, one obviously wants to know then how else can you use platinum? So, I mean, for instance, platinum, just like gold, is also a storage of value. It is also, a hedge against inflation. But how does that happen? I think one needs to look at the returns. If you look at the returns of gold and the returns of platinum, so historically those returns have been correlated very well to a point whereby platinum is giving the same diversification effect as gold when included in the portfolio, and also acts as a currency hedge, as obviously the underlying is in dollar. Another point which I want to make is the fact that just like gold, platinum is a physical asset, right? That investors can turn to in terms of high risk. In fact, if you're looking at the pandemic that we had, we've seen a high level of purchase on platinum coin and bars to a level that we've never seen before, a level exceeding the highest level before. So meaning that investors actually were turning into physical assets. I think that was actually happening around between March 2020 to August. So again, that shows that just like gold, platinum is also a very good asset to look into as an investor. I would like to pause there.
Oh, that's fascinating, Michael. I must admit that I did not know or understand about the platinum coins and the demand for platinum from let's call it a non-industrial sort of application as well. And that certainly would support some of this demand. But Johann, Michael has now alluded to some extent to certainly how the supply constraints from South Africa is affecting platinum in particular, but the PGM prices. But on the other side also, I mean, it's now been 15 months since the Russian invasion of the Ukraine. And I must say that many people, myself included, expected with this combination of supply disruptions out of Russia and then, of course, the production challenges in South Africa due to load shedding, the expectation was that the prices of platinum and palladium should have skyrocketed. And so, yes, I appreciate that the demand side was not there due to lack of car manufacturing, but we didn't see the prices respond. In fact, by August last year, over a 6-month period post that invasion of the Ukraine, the platinum price had fallen by around 25% in dollar terms. And yes, we've seen some recovery since then as sort of China started reopening and there's more demand coming from there. We've seen some recovery, but the price is still not even back to where it was at the beginning of last year. So what would you say were the major drivers of platinum price over the past year? And then what do you think is likely to drive the supply and demand over the next 12 to 18 months?
And I think there was definitely an overestimation of the impact of the Russian sanctions. And what a lot of people didn't know or doesn't know is that the Russian platinum and palladium from a production perspective was actually not sanctioned. So the production continued and that specifically then did not lead to the supply constraints that was expected by people because of the sanctions. what one has also seen is that the supply was also sort of diverted. Quite a bit of the supply that traditionally went to the European and the American market actually supplied the Chinese market. And there also that a lot of recycling started coming on board. So the expected supply shocks were not there. And it's to the point that you actually mentioned, is the demand shocks were there with China being closed to COVID and the economy just being less. So you actually had the contrary effect to what people thought was going to happen. Supply kept on going and demand decreased. And Micheal touched on these points, and I think the three main points for the current demand in platinum, if you can surmise them, is one is that there is now concerns around the supply, especially around South Africa's ability through, one, the mining, but two, the actual refineries and the whole. So it's actually the whole process that gets impacted through the load shedding. So I think there's a concern. There's definitely been a thrifting and a rotation from out of palladium into platinum, especially on your bigger car platforms where your catalytic converter can sit further away from the engine, because that's the one benefit that palladium has, is palladium can absorb a lot more heat than platinum. So on your smaller platforms, you have petrol platforms, you have to use palladium closer to the engine, but your larger platforms, you can actually do the substitution. And then there's this third view that there could be a change to the hydrogen economy, and then the overall hedge effect. So gold and platinum generally trade with correlation. And so it's always, as Micheal mentioned, platinum's a good substitute hedge for gold. But you've now got these three additional factors that potentially can give it more, some platinum in specific, give it some more upside and upside growth in the market. And as everybody knows, when you buy commodities, I typically say you don't get any fruits. What I mean by that is you don't get dividends and you don't get interest. So you purely buy it as a capital appreciation. And that's why the market thinks that platinum is going to appreciate quicker than the other PGMs and golds, and hence the big rotation. So, yeah.
Okay. The hydrogen angle is an interesting one for me. Is there the potential also that within hydrogen energy, platinum can be substituted, or is that almost exclusively just platinum that can be used in that space?
So it's platinum exclusively that can be used, and it's actually the current technology for the electrolysis actually uses quite a lot of platinum, actually more than what you would find in a combustion engine. But of course I keep getting reminded, the white coats at the industrial firms, their job is to try and use as little as possible, not as much as possible.
And especially as things get more expensive, there's lots of pressure.
Correct.
I'm being properly schooled here in, internal combustion engines and car technology and so on, which is great. Thank you. And fortunately, I guess it almost doesn't matter what your view is, because exchange-traded products really provide the ideal vehicle for investors to exercise their view on these different precious metal commodities, whatever they may be. But when it comes to being an issuer of these investment instruments, and both Absa and Standard Bank, 1nvest that you represent, are such issuers, the requirements for this is something quite different than for the other ETFs, such as equities or bonds. And when Satrix, as part of the Sanlam takeover of the Absa investment management business, took on most of the Absa ETFs, the commodity ETFs were specifically excluded from this transaction. And this is because Satrix does not have and can't get the authorization to trade and hold these physical underlying commodities. Micheal, please help us here. What are the laws and regulations that allow only banks and only some banks, or I guess authorized dealers, to hold and trade in physical precious metal commodities?
So that is actually quite a very a good question. So basically both the originator of this product, which is the banks, in this case it's Absa CIB Bank, as well as the issuers themselves, they individually own license to deal in commodities, right? Okay. So the issuer must obtain the license from the SAP to deal in commodities, as well as the market maker, who happens to be the bank, must obviously be a player in the space. But so the way it works is that in terms of the authorized dealers, right? So the Financial Surveillance Department basically allows the dealers to basically to deal directly with investors on commodities, and those commodities basically what they then do, they then get classified as local investment, provided those commodities are actually sourced locally. But I think the most interesting point from the dealer's point of view is that the authorized dealers, in terms of SAP and Exchange Control Regulation 5, they are exempt to trade, i.e. to buy or to sell the precious metal at a market price, whereas other people will be obviously compelled. But actually, again, no one can be able to deal with those metal if you are not licensed dealer. So that is basically one of the reasons. But another point that also I want to mention on that one is that if you look at the commodities futures and commodities option contracts with residents, they may be entered into with investors, provided that they're quoted and they're trading on an exchange. And that, of course, the dealer is obviously the licensed dealer. So those are some of the things. So very much basically it's limiting players in the market only to banks. To a point in time, even when it comes to ETNs, you can see that it's generally the banks. So I wouldn't say SAP is favoring the banks, but that is how it works. So you have to be a licensed dealer in this kind of space. Yeah.
If I can add what Micheal says, and people need to remember one of the firm favorite things they like about the commodity ETFs is that it holds the physical metal in a vault. Yeah. And outside of Krugerrands, it is generally illegal to hold gold and to get, and you need special SARB approvals and licenses to actually, because at some stage someone has to own physical gold and underpinning that ETF. And it's always while you can, if you hold enough of the physical ETF, you can actually go and uplift your gold. But the one caveat is you need the appropriate licenses, and only the SARB and the regulators can give that. So, I think because we know, I don't think, we know we're not just going to, you're not allowed as an individual to run around town with a gold bar. It's illegal.
Also not allowed to put it in your couch, guys, just by the way.
No. The only thing you can do is Krugerrands.
That's one. I think it gets more interesting when you've got a product that is approved by SAP. Now have to be secondary listed in other markets where those rules don't apply. Then it becomes slightly more interesting, but I wouldn't get there. Yeah.
That's really interesting, because I think what you guys are also highlighting here is that it's not just sort of a single license or approval. There's almost different types of licenses to be involved in the different activities that are required around, the trading in the underlying, as well as the market making and the being allowed to hold the stuff physically and so on. So that's really interesting. And Johann, it's been alluded to, I guess, because we're talking here about the commodities in physical form, but over and above the fact that there are some commodities that's just not feasible to hold in physical form, you might not be allowed to. So what are the other ways in which investors can get access to the performance of different commodities, and how does that get managed as an ETP issuer?
So Micheal mentioned the one form, and that's through the futures market. So and that's generally one of the firm favorites that a lot of the commodity traders actually use. Another form is through buying the equities, and the producers. However, that does come with what I refer to as operational risks, but it does, so the operational risks and the company performance risks. So it's not a pure commodity play. And then some of the other commodities that, as you alluded to, Nerina, that you actually physically it's not practical to hold, like oil, copper, corn, wheat. We do in the form of exchange traded notes, what effectively is backed by a underlying futures contract. However, what you do in the ETN then is you effectively just take the leverage out, because a lot of investors don't have the ability to open future trading accounts, nor do they have the administrative capability to do margining, because when you trade futures, you've got initial margin and daily variation margin, and that becomes quite burdensome. So it's effectively, you can buy some physical commodities through jewelry, Krugerrands, or alternative hedges. Then the ETFs, where they can hold the underlying equities, futures, and exchange traded notes is the different ways of accessing commodity exposure.
Yeah, and we've covered some of this in previous editions of the ETF Investor podcast, and I would encourage listeners to go and revisit some of those, whether it's oil or, as you said, like some of those agricultural commodities, also some interesting ways in which one can access the performance of that particular commodity in your portfolio, which is great. But Michael, I want to come back to you because silver is an interesting one for me. So you've mentioned silver alongside gold, because it's also a precious metal commodity. And I don't know, I would think that one can hold and should be able to hold silver in physical form, but it's only available as an ETN on the JSE. Why is that the case?
Yeah, maybe I think to answer the question correctly is to say, South Africa is one of the largest producers in all other precious metals, right? Gold, platinum, and palladium. So silver, we are not the largest globally and not even the largest locally. And I think one of the key things that when we want to do a very successful ETF, it must be referencing the underlying asset that is very, very liquid. So if the underlying asset is not easy to source or is not very liquid, then it becomes a challenge for the ETF and the market maker. So if you do an ETN, the good thing about an ETN is that you don't really have to hold the underlying, right? You don't have to hedge your position 100%. You can hedge it somehow. So that basically gives you some sort of flexibility. In fact, even if you're looking at the first platinum ETP that was on the market, it was not an ETF, was it actually an ETN which was issued by Absa. We started off by ETN because we found some challenges on the platinum side, even though we produce more than 70% of the global platinum, but sourcing it was not as easy as you would think. So we started off with an ETN because it was easy to do, and then when we understood the market very well, then we moved into an ETF. So so silver, yes, it would be a very good product, but obviously we don't have luxury of becoming the largest producer. And in terms of sub, the underlying asset, which is metal, must be produced locally. So you can imagine the constraint there. So if you want to source internationally, then we've got issues with sub as well. So that's one reason.
Okay, makes a lot of sense. And just to mention, the Absa New Wave Silver ETN is an award-winning ETN as per the most recent Saltos, South African Listed Tracker Awards. And then, of course, there's another award-winning ETF, and that's the 1nvest Rhodium ETF. Now, Johann, rhodium is an interesting member of the PGM family, and at 1nvest you do offer this one in physically backed form. But I understand that the underlying spot market for rhodium is quite different than that of the other PGMs. And Michael has now spoken also about, the pricing, the liquidity, and so on. Tell us a bit more about the rhodium market and how that pricing mechanism affects both the pricing but also the management of the rhodium ETF.
Yeah, so where rhodium differs from your traditional precious metals, gold, silver, platinum, palladium, all four those previous precious metals has got what they call a price fix twice a day that is done independently in the London market, where you can get, which is effectively the spot price of that metal located in London in a bar that meets certain conditions. So it's a very, very specific parameters for that price. So, and what a lot of people don't understand is that gold in a bar in London is a different price to gold in a bar in Johannesburg.
Okay.
And they call it loco differentials.
Okay.
Where I'm going with this is because rhodium is almost exclusively used as an industrial metal, it does not warrant, and the market never developed to create a spot price nor a price fixing mechanism like the other four precious metals. The other four precious metals price fixing mechanism has also got a history in the futures market and to clear the futures and that, which rhodium never just actually traded there. So you don't have this spot rhodium or a single spot rhodium fixing price for rhodium. So the question then is, where do you get the price for rhodium?
Indeed.
and there is a handful of big industrial players that provides pricing, and that pricing is, I don't want to say it's indicative pricing, but it is a very much what that large industrial user will buy or sell rhodium at for that day. So it gives you, that price gives you a very good idea of where rhodium should price. But then to trade the ETFs and buying the actual underlying, one has to physically go to the market, to the producers and to the users and actually get prices to buy and sell this rhodium at. And that's why you would find that it trades quite volatile with large bids and offer spreads, and it's quite difficult. It's very difficult to trade. It even gets more interesting for the other two lesser PGM metals that nobody mentions, which is ruthenium and iridium, which even trades less liquid than rhodium, but there is big demands, and the prices for those two have actually almost doubled over the last couple of years as they're being used. But there's just no viewable pricing for them.
Okay, very, very interesting. And Johann, does the same rule apply from the SARB side in terms of that you can only buy locally produced rhodium as well?
Yes, and luckily South Africa produces about 80+% of the global production. To put it in comparison, global rhodium production is about 1 million or just short of 1 million ounces a year. Where you would find the other two more known metals is almost up to 5-6 million ounces a year. So it's very big differences.
Okay, very, very interesting. Okay, great stuff. So today is Africa Day. And so, Micheal, I think Absa, and specifically the New Gold ETF, has been a torchbearer, a trailblazer for the developing of the ETF industry across the African continent. So it seems like a great day to just celebrate that again. But tell us a bit more about this journey and some of the challenges you encountered along the way, taking the New Gold ETF really across the continent and really sort of initiating the ETF industry, if I could say that, across the African continent.
I mean, doing an ETF in South Africa, I think it's one of the easiest way to follow. Because the market is obviously well established. Investors understand this product very well. Now, if you go to a market where investors are predominantly investing in fixed income and very little on equities, now you imagine you bring an ETF. Firstly, the word ETF on its own is becoming a problem. We're going to have to try to explain exactly what is that. It sounds like a derivative to many, but it's actually a simple thing. So that means then you're going to have to, the process will just require you to go through the entire chain. In other words, you will start with the regulators, explaining to them, educating them about this product, because they want to come up with the rules that will then will filter down to the exchange. Generally, the exchanges, I think they easily understand this kind of problems they can see in other markets, but the regulators are not always like that. So you want to educate the regulators first, get them to, and also talk about looking at the rules that they have or the regulations they have and see how the product can fit in, share some experience in other markets and how it worked, and then they can look into that. So once they actually embrace the idea, then of course you talk to the exchange, and the exchange is more likely to embrace the idea because they would have seen happening in other markets. And then once those two then are in the same level of understanding, then of course, then they'll come up with a listing rule, which is basically not very different to equities rule, right? But they will think that because it's an ETF, it must be something completely different. So once you get that done, then obviously that's a big part, but obviously the ultimate goal is to get investors to invest, because regulators and stock exchange don't invest, they just platform and regulate. So you're going to have to obviously do a roadshow, which again, you talk to asset managers like it happens in SA, you talk to the board of trustees, to pension funds, but what you find is that you're always going to come across with a big pushback. They will tell you, to know what, historically our market has been giving a very good return on fixed income, and equities has been good. Looking at gold, the performance is not same as what you see, and therefore by adding your gold into portfolio, you're going to reduce our weighted average return. So, and then also they don't believe in, so there's a lot of stuff that you have to come across, and you have to keep on educating up until a point in time where it resonates with them. And then I think, once that happens, then I think then you can then obviously looking into listing an ETF. Basically, listing an ETF outside of SA is more like you really have to get involved in kind of like helping them to develop the entire market, because it's not like in SA you just apply GSC, then get listed products and stuff like that. And again, there's also, I think, an issue of FX. As I'm sure we're all aware, in the market, I think there are times where sometimes investors will look at the ETF and look at it as a way to deal with their FX challenge. Okay, it's one way to deal with an FX challenge if you're using it as a currency hedge. But it's also another way to use it as maybe a way of getting money out of that particular country, which, obviously is not illegal. Most markets does allow that. But of course, in the regulators' eyes, it may come across in a different way. So I think there it's very, very much important that you actually educate investors your intention for bringing the ETF into their market, which is basically to make the products to be locally available for them. They don't have to open accounts in SA and trade. They can trade locally. And it also, in some markets, it qualifies as a local investment. Therefore, it helps them to deal with the issues of foreign exposure limits and stuff like that. Yeah. So again, the intention of New Gold in those markets is not for anything, but it's to make sure that they've got products available in their own markets. They can get the same benefits as investors in SA, which is diversification, currency hedge, different kind of whatever, and liquidity management and stuff like that. So they can do it locally. They don't have to. But then, of course, investors, you cannot dictate to them. Once they've bought it, it's up to them to decide what they do with it. As long as they comply with their own local regulations, there's nothing much that you can say. But our intention is very clear, is to make it to trade in the local market.
Yeah, because of course all of these are secondary listings of the New Gold listing, the primary listing on the JSE. Yeah. So it's really taking this investment instrument to those local markets and making it available to investors. So absolutely an incredible role in terms of developing those markets. But I appreciate the challenges that you've had not into it, but then the ongoing management of it also, which, very much as, although you're dealing here with a commodity that's priced in dollars, we all know that it is, once it actually gets translated into the local currency, as it does across all of these markets, that's where some of your major FX challenges really come in.
Exactly. And you need to understand the regulations very well, because each and every country has its own regulations, and that's one of the main challenges you have to deal with there.
Johann, sorry, what about 1nvest? I know that some of your commodity ETFs are also listed on the Namibian Stock Exchange. Do you have plans for the rest of the continent?
Yeah, we will always look at it. It's something we actively and constantly consider, given the Standard Bank's footprint across Africa. So, but as Micheal said, there's quite a lot of challenges in that, and then we'll see as the market develops and they become ripe for products, then we will do that and consider that. But for now, I think our focus is still in South Africa. We believe there's still some opportunities, and we've got a wider range of products here. So I think 1nvest is probably the only provider currently that offer the whole full suite across all the asset classes. And we think there's more to do in the local market.
Yeah, because of course the Namibian exchange also is relatively easy in the sense that the Namibian dollar is pegged to the South African rand. So there's no real sort of exchange rate issues in terms of that. And of course they trade off the same trading engine as the JSE. Yes. So Namibia is a bit of an exception, I think, to the rule. And I think there's a lot more, and I appreciate that you want to focus your efforts on where there's great opportunity, which we know certainly still to be in the South African market. Well, guys, this has been incredibly insightful for me. I know I have learned a lot. And I guess in closing, I don't expect either of you to make predictions on specific commodity prices. I don't know if any of you have got a clearer crystal ball than I do, but I'm not going to put you on the spot with that. I'm certainly also not going to ask you to make predictions on the exchange rate. That's even worse. But maybe just some thoughts on future developments in this specific segment of the ETP industry in South Africa. Micheal, let's start with you. What are your thoughts?
Well, so South Africa has always been, leading across the continent in terms of this kind of development, and it's been doing very well. And I think, it's actually been much more ahead of some of the regions across the globe. So, obviously now I'm sure, as we're all aware now, we've got actively managed ETF, which is, I think, is an exciting development happening in our market. So I think there's more to come. We'll see more and more development coming, or more new products or exciting products or innovative products coming into the JSE. So I think I'm quite bullish and confident that our market will continue to play the role that it plays, not only leading Africa, but maybe eventually leading the world.
Yeah.
As leading platinum, by the way. In platinum, Standard Bank and Absa are the leaders there in terms of course. Especially looking at this year's trading activities, more trades were happening in SA and not outside of SA, which is quite interesting.
Yeah, that's a powerful sort of value proposition that we as a country have in this space. And yes, I think there could be scope, for example, for maybe commodity baskets, indices of different, maybe even just precious metal ones, or currency hedged versions of some of these, as there's more and more focus on the dollar and its role in the global, maybe there's opportunity there. But Johann, I'll give the final word to you.
No, I think the market has clearly expressed a view that platinum is definitely the in favor metal for the next foreseeable future. We've seen the World Platinum Investment Council come out and say that this year is the first year that platinum will be in a deficit versus previous years that's a surplus. So I think and then you add all of that to the general fears in the world still. It seems that all indications are currently that the US is also getting to the top end of their rate hiking cycle. I see today we've also had a further rate hike. So I think all things point that there's definitely a lot more comfort in metals, commodities, and platinum. And platinum is one of the perceivably green metals going forward that is needed in what I would term the re-electrification of the world as we are changing our energy, how we are consuming energy. So there's definitely upside. I think rhodium potentially as well. We saw one of the large glass manufacturers in China selling their stockpiles. So I think that might be done now, and China opening up. So I definitely think there is a bit more normality of economic activity returning in the market. So definitely on that side. Insofar as more commodity ETFs, I think the basket has been done, because anything else becomes very difficult to store. I know for a fact that Standard Bank's not going to be happy if I fill up our basement with copper and oil, but and hopefully as the market is evolving around AMCs and getting comfortable with that, maybe ETNs will be back in vogue. Hopefully that can help as well.
Yeah, I think certainly the range of options that are available, both for issuers in terms of the specific type of wrapper, and then for investors being able to get access to a broad range of different commodities, I think is incredibly powerful in developing both our industry, but at the same time also for investors to diversify their investment portfolios and better align it with their investment objectives. So I, for one, am extremely excited and grateful for the great work that Absa and Standard Bank 1nvest has done in this space. And we'll continue to watch this space with a lot of interest. I guess for once we'll see whether, the idea of following the smart money, if the smart money was the institutional investors who resulted in pushing the platinum part of our ETP industry to all-time highs. Let's see if they are the smart money in due course. Guys, thank you very, very much for your time and your insights that you shared with us today.
Thank you, Nerina. Always a pleasure.
Thank you for having us.
Now that concludes this episode of the ETF Investor, brought to you by the ETF specialists, etfSA.co.za. Send us your questions and comments to etfInvestor@etfSA.co.za or tweet us at etfSA using the hashtag #ETFInvestor. I'm Nerina Visser for the ETF Investor, bringing efficiency, transparency and flexibility to your investments.